When I look at the stock chart of Palantir, ticker symbol PLTR, which of course has had a really big run here year to date, I also see something that I think is really worth pointing out from a risk management perspective. And that is very simply something called the average true range. Now, let me quickly define for you what that actually means, just in case you don't know it. So the average true range is essentially the average true move, that any given stock or asset will have done over the time period that we are looking at. So in the case of a daily chart, I'll make this a bit larger for you. What we are looking at here in a second is essentially, this is just the price of Palantir. It's essentially how much does the stock move per day on average over the past, let's say, 14 days, which is typically what the starting point is. Look at the top pane. Again, this is obviously big rally in Palantir. Very impressive, very profitable. And at the bottom, we have a corresponding steep increase. Now, here is the thing. As the stock has moved up and up and up, its average daily moves have also increased. So what that means is, let's say if I'm long this stock, or if I buy a call option, or I do something bullish, it's no longer the same as it was like even in October. The stock's average true range has gone from about, let's call it 1.5 to now like 4+. So it's more than twice as volatile. And this is where people get into trouble real fast with something like a stock like this, because they see it pushing higher, but they're ignoring the fact that it's becoming a more volatile stock because it's blowing higher so much. Because volatility cuts both ways, right? The stock can easily fall eight points in literally just a couple of days, which would be 10%, and that's really nothing. That would be nothing. That would be very much in line with what the stock's volatility is, but people don't think about it that way. So, this is one of the big problems we also have out there. People no longer think of volatility on the downside. They only think of how much can I make in the upside. And I think this is going to be something that we're going to be certainly focusing on very closely in 2025, because a lot of people are going to find 2025 markets very difficult if they can't actually trade the markets. Like I keep saying, the blindly buy the dip era, I think, is over. We're going to have to actually be traders from here on forward, at least for the time being. Hope it helps.